Selling options is the closest thing that I know to printing money. It's literally a dividend on steroids. There are many ways to profit from selling options. The easiest possible way of profiting from selling options, which I made over $1 million in options premium, is to sell a cash secured put or a covered call. A covered call is when you own 100 shares of a stock. You're saying you're willing to sell 100 shares of that stock at a certain price called the strike price at a certain date called the expiration date. And you're maximizing your gains. In theory, you should be able to have maximum price appreciation and collect premium. Premium never supersedes the main goal, objective of maximum price appreciation. If you want a video on this, click on the video up above. You guys won't be disappointed. A cash secured put is when you don't own 100 shares, but you are securing the put with cash. You are putting up your cash saying you're willing to buy shares of a certain stock at a certain price called the strike price at a certain date called the expiration date. And if you do it like me, for example, I like to use margin. I like to use margin as IOU collateral to sell my cash secured puts, and this brings in income. So I maximize my portfolio or assets by selling covered calls, and then I bring in an income stream through selling cash secured puts and getting a synthetic dividend or a premium. This is one strategy. This is the basic strategy. However, there is another way to implement cash secured puts and covered calls or a strategy. There's actually many ways. For example, you could do a strangle where you buy shares, you sell covered calls against the shares, and you sell a cash secured puts at the same time, therefore minimizing your cost basis or reducing your cost basis. If you want a video about strangle, I have a video up here. It's an amazing video. In today's video, I want to talk about a specific covered call strategy where you're using a covered call for an exact exit. So the point is not a regular covered call where you're doing maximum price appreciation. This is called a snipe, where you get into a position. In my particular play, SOFX, which is a 2x SOFI play. I'll share a screen in just a moment. Don't worry, just listen. Literally, calm down, sit your butt down, and listen. Pay attention. So this is an ability for you to exit a play, an exit strategy. This is a way for you to reduce your cost basis or increase your profits by getting a premium on a position that you already have a predetermined exit price to get out on. I'm going to be talking about SOFX. I'm going to pull up my screen in just a moment. This is a screen to my website. And if you want more information, because I took out like ads for all of my videos, right? So there's supposed to be no ads right now. Very easy to watch my videos. If you want more information, join my website. It is 100% free, money back guarantee if you don't like it in the first month, which means it's not free, but if you don't like it for the first month, 100% money back guarantee. So you can try it out for a month, absolutely free. If you don't like it, just email me, tumstrpltr@gmail.com, and I will refund you. No questions asked. That's the key. No questions asked. I just want my money back. You get your money back. And then you're going to be able to get updates like this of financial entertainment, never financial advice, where I actually make plays and break down the technicals. Take a look at the screen right now, and then I'm going to explain to you how I use covered calls to maximize my gains on this specific play. This is the website right here, retiredasap.com. There's going to be a link in the comments down below. Feel free to join. 6 days ago, I said, at everyone, I bought 3,000 shares of SOFX. It's a 2x leverage fund. It's down 26% this week. SOFI itself hasn't touched the 50-day moving average since May, and only for a split second back then during Liberation Day. Right now, it's approaching the 50-day moving average at 24.67 with the stochastic sitting at 4. Not sure where the bottom is, but I'm stepping in for a trade. Keyword here is a trade. Usually I'm a long-term investor, but this is a trade. The plan is likely to sell covered calls once it bounces, which I got a chance to do today, and see about a 35% upside on a quick move. And again, it's not advice, just documenting my own play. And when I do this, I give you guys the technical analysis. I explain why I'm doing this. This was the 50-day right here. SOFI was trading right around the 25.85 level. And besides for that, I also give you the stochastic and a couple of other things pertinent to the trade itself. Shout out to Lee right here. Absolutely amazing, killing it. Bought 100 of these shares and did the similar play. And this is the play right here. Currently, it's up 5.9%. I'm up 10% on the play total. On my cost basis is $37. And right now it's trading at $40.61. And I have a very specific exit strategy to get out of this play. Now, if we take a calculator and we go 100 divided by 37 that I paid, and then we're going to times it by the 50 that I want to get out at, that would be a gain of 35%. The thing is, how can we maximize our gains? And one way to maximize our gains when we know an appropriate predetermined exit strategy is to sell a covered call. So if you go 100 divided by 37, but now you're going to times it not by 50, but you're going to times it by 52. Well, now you get 40% gain instead of 35%. It's absolutely amazing. Where are you supposed to get that extra $2? Well, you're supposed to get it from selling a covered call, and this is what this video is all about. Take a look at another post. This is a post that I made literally right before I made this video, 29 minutes ago. It says, for those fortunate enough to have joined the SOFI SOFX play, I sold $50 strike covered calls expiring 10/17, collecting nearly $2 in premium. It was like $1.90 something. My SOFI X cost basis is $37 with the $2 premium. I'm set for a potential 40% return if the shares are called away at $50 in just 3 weeks. That's going to be a fantastic outcome, and I'll be very happy no matter where the price goes. This represents about a 5.4% premium on my cost basis. $2 of $37 is 5.4% in 3 weeks, not bad, which is a solid return for a short-term trade. I'm sharing this play for entertainment purposes, not financial advice. I don't plan to hold SOFX long-term. If the shares aren't assigned at $50 on 10/17, I'll likely sell another aggressive covered call to collect additional premium until the shares are called away. Now, if the shares pop up, right, if this pops up from $41, let's say to $48, and then I sell another aggressive call at $50, well, I'll probably collect another $5 or $6 in premium instead of $2, which is going to bring out this play to a 50-60% in my favor play. This is the play that I did. Go right here. This is the play right here. Now, from earlier this morning to right now, actually, I could stack this play if I wanted to do even more. Why? I made $1,600 of the play back. I sold for $193. It's currently worth $1.40. The market value now is only $4,200. And before, the market value was closer to $6,000. I made $1,600 on this play already, which means I can buy this back right now if I wanted to. I could probably buy it back at 90 cents if I wanted to. Get closer down to this bid. Bid is up right now, 135, but I could get lower than that 140 level or so. I could get out of it. The whole point is that there's many ways to stack your cash secured puts, many ways to stack your covered calls. Now, if you wanted to sell a covered call, all you would do is go into your SOFX, you would press trade options. Now, I don't have any, but if I did have, imagine I would just press sell call. I will go to October 17th, and then I will go to this $50 level right here, which is now paying $1.70. I got that $2 range on it. However, let's say that the price does go to $48 on 10/17, and I want to sell another covered call. I wouldn't be able to go 2 weeks out. I would have to go 1 month out. But let's just for shits and giggles see where we would be. Imagine right now we were at $48. So I would go $2 or $3 above this $41 level. Let's say we'll go 43. So I would be collecting actually $3 of premium instead of $2 of premium. If you add that I would go 1 month out instead of 2 weeks out, this would easily be $5, $6, maybe even $7 of premium. If this does not get called away at $50, great. I know what I'm doing. If this drops the price, well, now I have a cushion of another $2. So my cost base instead of $37 is now $35. So I'm not worried about a downward trend. And I'm very, very bullish when it comes to SOFI. Speaking about SOFI, I have another video right here about SOFI. And this is where I put up $1 million to make $203,000, which I'll show you in just a moment. But let's finish up with this play right here. If I wanted to sell this and you have the SOFX play, all you would do is click on this right here or anything that you want. You put in how many contracts you want. You put in the amount. Try to get higher than the mid-range. I like to go like, if this was 140 right now, I'll probably try 150 or something like this. And then you press review order, and then you would press continue over here. It's as simple as that. Let's take a look at my other SOFI play where I put up $1 million for $203,000 of premium. This is the play right here. Currently, I'm actually up $17,000 on this play, which means that if I wanted to buy this out right now, I would have to pay $185,000, $86,000 roughly, but I collected $203,000. So I would actually be collecting roughly 8% of the total that I collected. Since I sold this play for 20% premium, right? I put up $1 million, I collected 203,000. Let's just call it 20% just to make it really, really easy. I would be able to keep at 8% of the 20%, roughly 1.8% or so. 1.8% for literally a 1 week play is not bad any way you cut it. However, earlier today, this was actually a much, much, much better position. Earlier today, this went all the way down to this level right here of $4.80, which means I would have actually been up on this position in total more than 20%. Imagine I collected $203,000. I would be able to keep over 20% of that. It ended up being like, I think I was up like $36,000 at one point. Actually, I have a screenshot. So this is the screenshot that I took earlier today. And as you can see, at one point, I was up almost $39,000. You could see it right here. It was at $38,961, which I could have bought out earlier. I would have ended up paying back $164,000, but I sold this originally for $203,000, and I was doing a one-on-one meeting. By the way, if you want to book a one-on-one meeting, I have discounted one-on-one meetings on my website if you're a member. But if you're not a member, literally just go on my website, click on bookings. I'll show you guys in just a moment, and you can have a one-on-one meeting with me as well. But the point is that, as you can see, as SOFI ran up 8%, this went up 17% in my favor, which means the higher SOFI goes closer to my strike price, not counting time decay, which every single day this contract gets cheaper in my favor. This is asymmetric. It's not a one-to-one. 8% up in SOFI reduced this contract more than 2x, and this is just going to keep getting better and better the higher the price goes and the less time value that you have left. For anybody that wants to book a one-on-one, just go to my website, retiredasap.com. All you got to do is click bookings, and then you could see what's going to be available. It's going to come up right here. Just click on it. It's all automated, very, very easy. However, if you are a member and you want to do a booking, go into your toolboxes, and all you got to do is click bookings. And this is going to be a reduced price of $75 as opposed to the bookings. If you're not a member, it's going to be $100. Also, I give you a ton more time if you are a member. There's also other things on my website besides for just my plays, which is just for financial entertainment. You can literally track my trades every single day, my dividends, my option buys. You can also have all of my live events. We literally have Zooms every single week where we actually go over things in a group setting. The last Zoom went for 4.5 hours. I answer every single question. Nobody gets left behind. And unlike a lot of other people who remain nameless that charge you thousands of dollars upfront for absolute BS nonsense, this is $50 a month where you actually speak to me in a group setting every single week. Every single question gets answered. Nobody gets left behind. And then I put the recordings over here where you guys can double check. And if I didn't answer your question because you couldn't join the Zoom, and remember, the Zoom is actually like this, live with videos. It's not just me, you typing and me answering. It's actually interacting. Then I will answer it in the Zoom, even if you're not there to participate. And then you could watch it over here. Guys, the point of this video is simple. There are many different ways to implementing selling options into your regime, into your strategy, into your portfolio, into your daily life, whether it is reducing your cost basis, increasing your profits, asset appreciation, a quick entrance and a quick exit. Many, many different ways to sell options to maximize you as the best possible version of yourself as a trader that you can be. Being a trader doesn't necessarily mean that you're a day trader or a swing trader or it's a bad thing. Being a trader could really just mean selling options to increase profitability and to decrease downside risk. Many different ways to do this. I hope you appreciate no ads, and I hope you appreciate the no bullshit, the transparency, the real world examples that I give you on this channel. Thank you very, very much for watching. Everybody have a blessed day. Click on these videos if you want more information. Thank you very, very much. I'll see you guys in the next one.